In this video, we're going to look at when you should use a market order and when you should use a limit order. Stay tuned. Hey traders and investors, a very warm welcome to you. So, market order, limit order. When should we use and when's the best possible time to use each different type of order? So very quickly, let's just run through the order types. A market order basically is saying, hey, I want to get into the market now. I do not care about the price I get in, but I want to get in now, which is why we look at market. It's very, very time sensitive. I want it immediately and I'm prepared to sacrifice the price, i.e. pay a little bit higher if I'm going long or go a little bit lower if I'm selling short and to get actually filled immediately. So that's why we use a market order. A limit order, completely opposite. We're very, very price sensitive, but we're not time sensitive. So we're prepared to wait for our fill and not get filled at all potentially, but we're very, very specific on our price. It's got to be if we're buying at our price level or below, if we're selling at our price level or above. So two completely different focused goals, if you like, for the order types. So limit order, market order. When should we use one or the other? I am a big advocate, specifically when you're day trading, so if you're a day trader, of using limit orders the majority of the time. Let me tell you why. Limit orders the majority of the time reduce the amount of urgency you've got. As day traders, I would say 80 to 85% of day traders that I kind of liaise with, work with, chat with, whatever you want to call it, have a problem of over trading. They're too aggressive. So using limit orders stops that aggression. It means that you're thinking, it means that you're actually saying, hey, you know what? I need to use a limit order. Even if you're using limit order at best bid or best offer, you're still giving yourself that little second of time just to stop and stall. And most of the time, you're going to use a limit a little bit away from the market. You're going to say, hey, I don't need to chase this. I can use a limit a little bit away. I'm still going to get filled. You can still go relatively tight, but you don't have to be so aggressive. So let's look at when you could use a market and when you could use a limit. Under normal circumstances, you are most likely going to get the most value from using a limit order. Let me explain why. The first one is just as I mentioned, the fact that if you're day trading, you're kind of not chasing the market. But regardless, day trading, swing trading, investing, when you're doing your analysis is going to say to you, hey, I'm interested in getting long at this price level. I'm interested in getting long if this price level breaks. Now, that may well be a stop limit, but you get the point. You're waiting for the price to go to a level you specify as opposed to getting in immediately. You're price sensitive. So by the very nature of your analysis and the very nature you do things, you're going to want to define a price level where you want to get involved. Now, does it mean you have to go to full position at that price level? No, it doesn't. You could use half a position, quarter of a position, tenth of a position, just something to alert you to get you into the trade. Sets the frame, sets the anchor point, gets you in at a level you're interested in. Now you can start to look a little bit closer. But the main thing is it stops you chasing markets. And also, even if you are a day trader, let's say you want to get long now, just going, the range of a 1 minute candle below that bid means you're likely to get filled. You're most likely in the most market conditions to get that oscillations. Now, let's look at market orders. There are times when you're going to have to use a market order for specific setups and strategies. You need to have that urgency. So let's use an example. You're trading a momentum type trade on after news, after earnings or something like that. So you're waiting for a catalyst and you're jumping on for a specific pattern. So let's just say if we draw something now, the classical one, which you probably see me draw if you're a veteran to the channel, the drive up, the little pause, and then a continuation. Let's say this is after data. So data has come out here. We've got a reprice scenario. We've rallied up 100 points, 100 pips, whatever it is, we're trading FX. A slight little pause here and another leg. We're not chasing the market. This is a predefined strategy that we've already qualified. We know that works. We've got trust. We've got confidence in it. It's part of our risk tolerance. Everything fits. So we're not just saying we're shooting from the hip here. That is going to require a market order because the sheer momentum of the trade means that if you start messing around trying to get clever with limits or even limits here, the thing's just going to fly off without you. And dare I say it, your market orders are going to create and help the kind of snowball effect of that offer getting lifted. If you're there trading directly in the exchange, of course. If you're trading via spread bet or CFD, not so much. People trading directly in the exchange, so you're trading directly in the futures exchange or whatever it may be, then actually that hitting that offer is probably going to cause cascade more and more and more. So Market order, very good for very, very extreme aggressive moves that you want to jump on. So that is a catalyst, something, maybe even if it might not be a catalyst, it might just be, hey, a really aggressive move that, hey, you know what, if I'm trying to bid my limit up, I'm going to end up paying up anyway, so I may as well pay up now. So I don't think that's very often. There's only very, very few setups where that really is necessary. Most of the time you can use a limit, you can play with a limit, but those times when it's really, really, really price sensitive, or really, really time sensitive, should I say, in other words, you've got to get in now, and I need to just pay up because this thing is rolling, I've identified it, I've got whatever system I have for identifying this type of move, then using a market order. But most of the times I would recommend using a limit order. All right, guys, if you haven't subscribed yet, please consider doing so around here somewhere, depending on mobile, tablet, desktop, or whatever. But appreciate your subscription, appreciate your thumbs up. Thanks very much for watching. Comments in the comment section below. See you in the next one. Take care. Bye-bye.